Let's continue our results service now on Power Lunch, because FirstRand has posted a 20% jump in full-year earnings, propelled, it says here, by strong growth in loan income and earnings from fees and commissions. Earlier, our colleague Gugu spoke to Sizwe Ngazana, who is the CEO of FirstRand, who unpacked those numbers further. Here it is.
Well, let's just start in South Africa. In the area of investment management, we've started a business called Ashburton. In fact, it's not a new business. We've taken a business that existed, was operating out of the Channel Islands in the UK, and we've brought it here to grow an asset management or investment management business, which we don't have because a couple of years ago, 3 years ago, we unbundled Momentum, which then went with RMB Asset Management. So that's one area. The second area is really, if you look at our contribution of our business in, for instance, the area of corporate banking, especially in the installment-based financing business in West Bank, we still have some opportunities to grow our business there. And then when we go to the rest of the African continent, the contribution that we get in our profits from the rest of Africa as well as India is about 9%. And we think there's an opportunity for us to continue to grow there. And we grow using three strategies, essentially. We grow organically. For instance, we've started new businesses in Mozambique, in Zambia, Tanzania, and more recently in Nigeria, as well as India. And that's the first strategy. And secondly, we use a lot of our balance sheet in South Africa for cross-border activities. For instance, RMB has financed an increasing number of transactions in infrastructure, agriculture, telecoms, and so on in the rest of the continent. And their balance sheet has grown very strongly there. But we still have some way before we believe we have a fair share of our profits. And then, where it makes sense, we'll always look around for acquisitions. At the moment, we are a business that's highly focused on maintaining high levels of return on equity. And therefore, we tend to pursue smaller acquisitions if we do acquisitions at all.
Speaking, you mentioned there that you've targeted the likes of Mozambique, Tanzania recently, as well as RMB receiving a license recently to open up an office in Nigeria as well as Kenya. Any other opportunities or plans to expand onto other countries on the African continent? Well,
cross-border activities are something that we do in a number of countries where we don't necessarily have a physical presence on the ground. So we do transactions in Angola. We do transactions in Ghana. In fact, Ghana has been really good for us because we've been involved in a number of areas: real estate, infrastructure, agriculture, for instance, the cocoa industry, which is very big in Ghana. So we've done quite well there. The power sector is growing quite nicely. Oil and gas is another sector. So we can use our balance sheet in this country without necessarily having a physical presence on the ground in some of these countries. In terms of physical presence on the ground, of course, Ghana is important, so we will be looking at a way of establishing our physical presence on the ground there. India is a growing business and it's doing quite well for us. Kenya is really important in the context of the trade corridor between India and East Africa. So we're looking at some point at establishing our presence physically on the ground, not just a rep office, but an operation in Kenya as well.
Sizwe, another sweet spot for FNB's numbers was the fact that it's become the leading provider of technology devices such as Apple as well as Samsung technology devices for many South African consumers. But just exactly how quickly do you get new products into the South African market for your clients?
If you just look at the fact that FNB in this last financial year had 2,500 new innovations. Some of the innovations are driving efficiencies in business. Some of them are helping us grow our customers and new accounts. Some of them are just making it easy for customers to do what they do. And we're trying to overlay that with the rewards programs. In other words, make it more exciting, more affordable for customers to really come across to FNB and deal with us. And there's a value proposition that underpins all our innovations, that we're not just innovating for the sake of it. We innovated for the purpose of making it easy for customers to do what they want to do when it comes to financial services broadly.
Sizwe, for many South Africans, their credit appetite has been suppressed more recently and over the last couple of months. But would you say that there are renewed concerns with regard to unsecured lending in South Africa?
Well, it depends on where you are in terms of the customer segments in unsecured lending. In our own particular case, for starters, unsecured lending is about 7% of our total lending book. Secondly, the area which is in the lower end of the market, which is where we see a lot of stress in terms of, for instance, bad debts and so on, has the least of exposure in as far as we are concerned. With about a third of exposure is in the lower end of the market, and 2/3 is in the middle income area, which is in fact still doing quite well. And in our own case, more than 90% of our unsecured lending is to customers that bank with us. And therefore, we have a much better sense of how those customers behave, their income and affordability levels, and so on.
Let's take a look at Michael Jordaan's contribution to FNB. We all know that he'll be stepping down from his position in a couple of months. But what exactly, or what kind of contribution or legacy do you believe he's left at FNB?
Well, if you look at the ascendancy of innovations within FNB over the last 10 years that Michael has been there, it's absolutely been amazing. And really he's created a culture in an organization that understands that people are empowered, they are there to serve customers, they are there to find new ways of doing things, of doing better things. I think that's probably the most important legacy that Michael leaves behind.
Recently, we also saw the banking summit taking place in Johannesburg, and there were some strong disagreements that came through with regard to where the growth of the South African economy is coming through from, in particular between Stephen Kossef, Chief Executive of Investec Bank, as well as Cyril Ramaphosa, who is now the Deputy President of the country. What are your thoughts with regard to that disagreement, or more importantly, where exactly the driver of economic growth in South Africa should be coming from?
Well, if you look at how much government is spending in infrastructure in this country, I mean, and as part of fixed capital formation, as an example. I mean, there's a significant amount that is going into the 8 strategic investment projects, the SIPs, that we have in the country. And they are in the ports, in roads, in telecoms, in developing new towns and power and so on. And they've been one of the key drivers to the economic growth that we are even achieving today. And I think it's important for the private sector, for the banks, to support some of the initiatives that government has in the pipeline. And there are areas of the National Development Plan that are being implemented already. For instance, involved in education. We've created a National Education Collaboration Trust where we bring government, the private sector, unions and civil society to improve the quality of education in the country. And that is all done under the auspices of the NDP.
Sizu, let's take a look at your operations in Kenya. What I find quite amusing is the fact that you've got your hands in 2 pools, essentially, where you're trying to access the unbanked market with the likes of your e-wallet services. We all know that M-Pesa, Vodacom's M-Pesa, has been incredibly popular in a country like Kenya. But at the same time, you're also hoping to introduce this market to traditional means of banking. So kind of seems as though it's the best of both worlds.
Yes, I mean, if you look at a market like Kenya, M-Pesa has sewn up the money transfer or remittances market. So we'll be looking at alternative ways of how you enter a country such as Kenya. Cross-border activities, the corridor between India and Kenya or East Africa broadly is quite important and so on. So those are the areas where we're going to be focusing on. In other countries, you find that each country is different. For instance, the uptake of digital technology in a country such as Ghana, as an example, is still at very low level. And there are certain things you need to do in that country, certain characteristics of the country that are very unique. You've got to develop products that are suitable for that market. So that's why you can't look at all countries in the same way. You've got to find solutions and products and innovations that are suitable for that particular market.
Sizu, there's also been a nice 33% increase in your dividend for your investors and shareholders. Would you say that this kind of dividend payout is sustainable at these levels?
Well, we have dropped our dividend cover to about just about 2.2 at the moment, and that is an indication that there's a new level of payout ratio that shareholders can expect to see in the future. And of course, we have to take into account our focus on protecting the ROEs, our focus on the growth strategies that we have, not just in South Africa, but also in the rest of Africa as well as India. So we can expect the dividends to grow more or less in line with the growth in profits in future.
That was Sizwe Ngazana, who is the CEO of FirstRand, commenting on that company's excellent year-end results released earlier today. Alec,